Much of the coverage in the cryptocurrency space over the past several months has focused on the effects of the coronavirus, companies adapting to new circumstances, the sudden upswing in fintech adoption and new crypto users, and predictions that economic turmoil could make crypto bigger than ever. However, while the pandemic and all of its accompanying events have continued to rattle on throughout the world, certain aspects of the cryptocurrency industry have continued along the trajectory that they were already on before the coronavirus, albeit perhaps slowed, interrupted, or in some cases sped up. One of these is the entrance of institutional cryptocurrency investors into the space, and the accoutrement that has come with them: wider spread regulation, an increase in trading tools and features, and much more liquidity in crypto markets. Recently, finance magnates spoke with Ciara's son, head of Huobi Group's global business and markets. Ciara talked about the state of the institutional cryptocurrency market, how the market is going to continue to change, and about Huobi's place in the future of the market. I'm Rachel McIntosh, and this is the Finance Magnates Blockchain Podcast.
Ciara, I want to thank you for joining us on the show.
Thank you for having me.
Yeah, definitely. So I know who you are, but can you talk a little bit about yourself and the work that you do?
Sure. So my name is Ciara Sun. I'm the vice president at Obie Group, where I oversee listing, global markets, and institutional business. Before joining Huobi, I spent most of my career in traditional finance industry in New York City. I worked for Boston Consulting Group as management consultant. I also worked for EY, advising banking and capital market groups for major banks, hedge funds, and PE firms, and a lot of investment management corporations.
Mm-hmm.
And being the traditional finance industry, I just saw a need for innovation in many areas, like asset management, payments, mobile banking, and other stuff. So at that time, blockchain and digital assets were just emerging as a new approach to decentralized finance. And then I found it's really fascinating. So I decided to try something more entrepreneurial, to join an industry that's so young, so lively. So that's why I just jumped from traditional finance to cryptocurrency.
Okay, so was Huobi the first company that you worked for in the crypto space?
Oh, actually, no. I advised some other projects before, and I was the chief strategy officer for another smaller exchange, and then I joined Huobi.
Okay.
And I was really taking a lot of time doing due diligence, on a lot of the different major crypto exchanges before deciding which one I'm joining. But a big part of was driving me to join Huobi was the fact that this company operated more like a traditional financial firm with very strong internal processes and proper licenses, regulatory compliance, and it has a very, very strong brand reputation in the East. So after a very long conversation with the founder early on, I just found that we really share same vision and same value system, and I just believe that we can do a lot of great things together.
Okay, so let's talk a little bit about the institutional crypto market, since that's a lot of where Huobi's work is taking place. Can you tell us a little bit about your thoughts on the current state of the institutional crypto market?
Yeah, so cryptocurrency have been on the institutional radar for years, but the current market volatility and economic climate has created a very ideal environment for institutional traders. It's a perfect storm. There's volatility and uncertainty in the traditional financial markets. Central banks around the world are printing record level of new currencies, and inflation is looming. And Bitcoin just had its surge halving. And I think there are lots of reasons behind it. So first, with everything that's going on, I'd say there are two main reasons we're seeing institutional traders enter the market right now. So the first is that investors are looking for a way to hedge monetary policy risks like quantitative easing. Well, Bitcoin isn't the same kind of safe haven asset like gold, but its decentralized nature means it's less likely to be impacted by the policies or actions of any one government.
Mm-hmm.
It's part of, yeah. So it's partly why investors flock to digital assets when there's political turmoil or currency devaluation risks. And the second reason institutions are entering the market is pretty simple. So they're looking for returns in a volatile market, right?
Right.
So crypto market can be very good for traders who can hedge their risk while still finding arbitrage. So derivatives products like futures, contracts, and perpetual swaps have becoming increasingly popular among the institutional crowd. And institutional investors are very active in the spot markets, but we're seeing even more growth in derivatives market. So, for example, just some numbers. We've seen institutional trading volume on Huobi futures grow more than 80% in recent months. And one common misconception we come across as it relates to the derivatives market is that high leverage is kind of related to gambling, but it isn't true when it comes to institutional traders. These kind of traders have a very strong understanding of investment risk and know the importance of hedging. So it's much more, math than just luck.
Mm-hmm. Mm-hmm. Okay, yeah, absolutely. And so you mentioned a little bit about how institutional investors are attracted to something like Bitcoin because the actions of no one government will have, a significant effect on Bitcoin. Do you think that that's particularly important this year compared to, let's say, 2019, 2018?
Yeah, I think so. Just because this year is a very special year, given the whole COVID-19 situation and the whole
Absolutely.
economic climate has become this volatile. And we can see there are conflicts and just different perspectives of different governments.
Mm-hmm.
And I think Bitcoin, as a very decentralized asset, has a good position in this current economic situation right now.
Right, definitely. How else, I mean, do you think that there are any other, sort of notable differences this year versus, the previous years in terms of the institutional cryptocurrency market?
Yeah, we're also seeing institutional investors getting much more serious about compliance and regulations.
Okay.
Both in the assets they trade and the platform in which they trade on. When the whole cryptocurrency space started, it was like 10 years ago. It's pretty wild, and now
Yes.
it's getting much more serious and regulated. So part of this is driven by the entries of traditional institutions that have just more requirements of for what and where they trade, and also due to the fact that digital assets becoming more prominent in every market. So regulators are stepping up their efforts in classifying and regulating digital assets in a formal environment. Institutional investors know that compliance is critical for long-term sustainability of the industry. And we as a company has been putting a lot of efforts for trying to be fully compliant and regulated, and for every market that we go to. We are probably one of the exchanges that holds the most licenses in the whole space. We've got the license in Gibraltar, in Thailand, and we are the first group of exchange that got the exchange license in Japan, and HT, our platform token, has also passed the regulation by local regulators, and now is a regulated and fully compliant assets that can be traded on Huobi Japan, where it's happening today. It just got listed on Huobi Japan today.
Okay. Wow. Okay. That's very exciting. So, that's very interesting. Also that institutional traders are sort of taking this regulatory thing a lot more seriously this year than in the past. Do you think that this is, will this build a more sustainable ecosystem over time?
Yeah, absolutely. So we can see growing credibility happening in this space,
Right.
right?
Okay.
Yeah. One of the biggest changes over the last year is that crypto markets gaining more credibility at a much quicker pace. Some of this can be attributed to the acceptance of digital assets trading on major platforms like CME, right? Which primarily attract institutional traders. We're also seeing many big names in the traditional finance, like Paul Jones, which they are now adapting and investing in Bitcoin and in digital assets. So credibility and institutional adoption seem to be very closely correlated.
Definitely. And how do you see this affecting the cryptocurrency space? In a couple of different ways, I want to ask you. So, in terms of, will the institutional side of things, as the institutional side of this market continues to build up, what kind of effect will that have on retail traders, both in terms of like their user experience, and also how will this affect cryptocurrency prices? I guess that's something that affects both retail and institutional traders.
So first, I'd say when institutional traders come into the game, it means that they need more features. They need more professional operated platform, and they're driving regulation and compliance, driving credibilities, and they are also driving liquidity in the market. So I think in both ways are really making the whole ecosystem more healthy and making this more massive adoption for even retail traders. For retails, liquidity is also important, right? It affects the price that they can get for crypto. And when compliance regulation come into play, we can see fiat on-ramps getting solved in many countries. So it's really bringing cryptocurrency to all over the world for people who host different currency to be able to trade crypto. And just to expand on demand for more features, that's the thing that we've been getting feedbacks from our institutional traders. So last year, because we see the trend of institutionals coming into the game, we'll build this institutional BU just to tailor projects for institutional traders. So we've been constantly getting their feedback. And one thing we see that in the institutional space, increasing demand for new trading products. Now, more than ever, institutional traders are looking for better, newer ways to hedge risk and create arbitrage. So they want more complex financial instruments within a safe and reliable trading environment. For example, we recently launched perpetual swaps, as has been already rising to the top of the market by record. We were really happy to see this.
Absolutely.
And in regards to 24-hour trading volume, liquidity is already ahead of our biggest competitor in this space. And we're launching our bi-quarterly futures contracts today because of user demand.
We kind of touched on this throughout the conversation anecdotally, but if we're just going to kind of collect our thoughts on the things that you were saying, what are the trends specifically that you see emerging at this particular moment in time in terms of institutional crypto market?
Just some really bold predictions, right?
On
the future of institutional. Yeah. So I think within the next 5 years, more than 85% of institutionals will have exposure to digital assets in their portfolio. And secondly, as a result of institutional need for regulatory compliance, many smaller exchanges that do meet regulatory requirements will either shut down or get consolidated. And in the immediately future, Bitcoin will remain top cryptocurrency for institutional investment. And crypto derivatives market will lead growth in the institutional sector as more sophisticated investors enter the space. And Yeah, and Asia currently dominates the institutional crypto market, but the West will soon catch up as digital assets become better defined and regulated.
Okay, excellent. So let's switch gears a little bit. As you mentioned, there's a few things that Huobi is launching today. Can you talk a little bit about those products in a bit more detail, and just more generally, how specifically is Huobi working to build up the institutional investment space in cryptocurrency?
Sure. So two things we're launching. Just first, the HT token, Huobi token, is getting listed as a regulated and compliant asset on Huobi Japan Exchange, where we hold a license. And second, we're launching bi-quarterly futures contracts, and it just it's a add-on feature to our current futures contract product. We offer weekly, bi-weekly, and quarterly, and now we're adding bi-quarterly to our product. Okay. And a few more initiatives around institutional crypto. So a big focus for us in catering to institutional audience is the continued growth of our derivatives exchange, Huobi Futures. According to data that's just released, I think last week by Token Insight, the first quarter of the year saw derivatives market trading volume of Huobi reached $438 billion, accounting for 22% of total market trading volume. And we've launched several new products this year, like perpetual swaps, bi-quarterly contracts, both of which appeal to institutional traders. And Huobi Futures only launched perpetual swap product 2 months ago, but in that short space of time, it managed to race to the top, to the pile, while trading volume 24-hour reached high of about $5.5 billion.
Okay, very exciting.
Yeah. Secondly is risk controls and reliability. To ensure institutional traders are able to trade within a safe environment, we're taking all measures to maintain strong risk controls and platform stability. And our Huobi Futures risk control teams from traditional finance companies, they work for Merrill Lynch and Goldman Sachs in the risk control sectors. And they were able to bring all the expertise to cryptocurrency and build this great product. So for example, the recent cryptocurrency market collapse, in the famous March 12th event.
Yes.
We saw the implementation of a new liquidation mechanism from Huobi Futures that systematically minimize user exposure during times of severe market volatility. And additionally, we have become known to have guaranteed zero clawback since day one, and has been substantially maintained that. And while also experiencing little to no downtime. That's very important. Something that has become very, very important piece for cryptocurrency trading ecosystem in recent times. And as we're speaking, our trading volume is among the biggest, among different futures trading platforms, but liquidated dollar amount on Huobi during March 12th, the major collapse, were only about 18% compared to BMAX. So just that's when we're reviewing the data, it's very impressive to me as well.
Yeah, I mean, that day in particular really, tested the global infrastructure in a big way. That really sort of revealed like where the weak spots were in the industry for sure, and also where the strengths were. Can you talk to me now a little bit more generally about Huobi's global expansion strategy? So, as you mentioned, Huobi has really taken quite a big chunk of the global daily trading volume. How has Huobi managed to grow itself, particularly within the last year?
So we'll take Japan as example when we speak of international expansion, as more institutions and retail traders coming into the market, they will continue to seek compliant exchanges and assets. So compliance is a central part of our business model. So we operate with all necessary licenses and regulatory approvals in every market we serve. So for example, our native token, like I said earlier, the Huobi token is recently approved by Japan's Financial Services Agency as the first major exchange token to be traded in Japan, which starts today. And we saw great liquidity and market demands. Trading volume is really good on HT token. So now it trades on Huobi as a fully compliant cryptocurrency, which is the country's 7th largest crypto by market capitalization. And I think for other countries that we're going to, we operate in the same, with the same methods and the same vision. As people know Huobi as one of the biggest brand in the Eastern market, we are really determined to go global and go to the Western market. So currently, our trading volume, Eastern versus Western, is 60 and 40. So it's not that bad. It just we are continuing to put in more efforts to bring a stronger branding in the Western market, and just to go out there and talk to media, talk to our partners, and talk to our communities, our users, to make sure that they know who Huobi is and what we stand for, and what's our vision and what we want to achieve in the market. I think that's very important to build trust. So we just aim to be the leading and trustworthy exchange in the world.
Okay, and so I'm curious, in many other cryptocurrency exchanges, or maybe I won't say many, but certainly Binance, for example, part of their expansion strategy has been that there's been kind of this personality, this like face associated with Binance, with CZ. It's everyone sort of knows, okay, I can trust Binance because I know who the CEO is. I see him every day talking all the time. Is that going to be part of Huobi's strategy? Is there going to be sort of one person or several people that are associated with the brand? And if so, is that going to be you or somebody else?
So first, I think that's important, right? For users to know who's making all the big decisions for the company. That's good. But we don't want to be too talkative, and we definitely want to be sure about everything that we say. To be responsible, especially being the largest exchange on the world, we are obligated, right? We are responsible for this market, and we kind of represents crypto to traditional. So we have to be, I just think that whatever we getting said on even social media, just have to be more, how do I say, more responsible, I'd say. But I am Huobi Group's official spokesperson, taking on the interviews and being on Twitter since the beginning of this year, and talking to our users and our partners, and that's been great, and it's been really fun for me. And apparently Twitter fans love my cats. They really like my cats.
Yeah, that is such a good strategy, bringing the cats in, absolutely.
I have a cat with cancer, and we took a photo together. So I've been keeping that photo as my profile photo, and they love it. They love my cat. And I saw a post yesterday that a lady on Twitter said about motivations in life, and she said, I am her biggest crypto motivator, and I make me really happy. And he posted the photo with me holding my cat. That's really sweet. So so think, just being there and showing the world who I truly am, and even share my life and my cats. I think it relates to people and make people feel that they can trust you, and that's really important for companies. Just the culture that you show people and the feel that you give people. And we're pushing Leon to be on Twitter as well. Leon, it's just he is more like a thinker type of person. He is really great on strategies. He's made a lot of great strategy movements for Huobi, and he's a great entrepreneur. And just talking to him, you learn so much. But he's more not that talkative especially on social media a lot of times, and he's not perfect with English, but he sees that this is so important for our users, especially with crypto. There's this concept of community, right? You have to be there and be involved. So he's trying to spend more time with our users as well.
Okay, fantastic. So before we sort of wrap up this interview, I want to ask you about your thoughts on the year ahead. What are your sort of big, bold predictions as far as the year ahead is concerned, within and outside of also the institutional space in crypto?
Yeah, we kind of touched on this question earlier. So first, I just made a very bold prediction that I think more than 85% of all institutional will have some exposure to digital assets in their portfolio, and hopefully that comes true. Also, I just think that as a result of institutional need for regulatory compliance, a lot of the smaller exchanges that doesn't meet its regulatory requirements will be shut down. And I think for in the next 5 years, number of retail users coming into crypto will be massive. And in order to serve those massive adoption for cryptocurrency, strong system and risk control will be very, very important for any trading platform. So that will also be a key feature. A lot of these smaller exchanges who doesn't have a strong enough system will be shut down also. Yeah, and we're not allowed to make investment suggestions to our user, but personally, I think Bitcoin is a great asset because of all the reasons that we talk about. It's a good way to hedge risks, decentralized, not controlled by any single government. And as we see this great institutional adoption, who's accepting Bitcoin, and a lot of the payment companies accepting Bitcoin as the payment, I have great confidence in Bitcoin as an asset.
Okay. Ciara, I want to thank you so much for your time. It's been so fun and so informative to speak with you.
Thank you.